Hey everyone, Alexis Gallati here, Cerebral Tax Advisors. I want to thank you again for coming to the webinar, and hopefully Skylar and I had gone in, answered a lot of your questions, but there were definitely a few more questions that needed to be answered. So I thought I'd go and discuss a couple of those that really it's easier to do through a video than doing through typing. So one of the first questions was, I was told an LLC is not needed nor the others. Is there a risk in not having one? So the LLC, at least for the case of a physician, basically it doesn't provide any added liability protection. Now, of course, depending on the state you're in, you'll want to consult with an attorney to find out, but in my general experience, pretty much most states, it doesn't add any additional protection. I mean, if you go out and you kill someone, you're going to be liable for it. So um, there's no reason to have the LLC for liability purposes. When it comes to flexibility, when it comes to the different entities, it can definitely be helpful because let's say you're not sure how much you're going to be earning in 2021, and you're not sure if you're going to hit a certain income requirement to make it worthwhile to be an S corp, for example. So if you at least form the LLC now at the beginning of the year, then you can make a late S corp election all the way up to the filing of your tax return to go and treat the year as if you were an S corp all year. So that gives you a little bit of flexibility where if you were just a sole proprietorship, you wouldn't be able to do that. So you'd have to divide your income between being a sole proprietor and an LLC S corp, you know, um, uh, uh, you know, whenever you had done the transition. So there's definitely that pro to it. And there's no risk in having one besides the fact that you're going to owe an LLC fee to whichever state that you're going to be setting up in, and the fees vary by state. So like in Tennessee, it's $300. In California, it's $800. So in some other states, it's little. It's like maybe $100. So it really just depends on where you are. And there's a lot of resources out there to just Google, the LLC fee in your state. So, however, there are some states that don't recognize the PLLC, as I mentioned during the webinar, and that is like, for example, California. So if you were to incorporate, then you have to be a professional corporation in California. Like, then that's a C corp. And then if you wanted to be an S corp in California, then you have to set up your C corp, set up your PC, and then make the S corp election. So, it just depends on the state that you're in. Okay, next question. Is there an income threshold for 1099 that would make an LLC S corp worth setting up? I'm going to be doing 1099 work in addition to my base W-2 private practice. Great question. So in general, with an S corp, I start to look at it more seriously to actually becoming an S corp. When you hit the like 200, 300 range. And that's because, as I mentioned during the webinar, you have that 199A deduction or QBI deduction. They're both known by both those names. And that's that 20% automatic deduction that you receive if you are um, generally under about $400,000 of income. And so, and that's all of your income combined, not just from 1099 work. So it's you'll want to make sure that you're doing the math and you're figuring out whether or not it's appropriate for you to actually become an S corp. Now, on the flip side, I have clients who only earn maybe $50,000 or $60,000 in 1099, and they're able to go and become an S corp and then run a defined benefit plan through their practice. And the reason why you have to be an S corp is because if you run a defined benefit through your practice, and let's say you contribute $200,000 into your retirement, then you're going to be running obviously $140,000 loss through the business. And when you're a sole proprietorship, you can't run that loss. So you have to be an S corp in order to run that loss. And yes, I know what you're thinking. So if I'm only making 60, how can I contribute 200? Well, it's because um, you're essentially what you're doing is you're moving money from your W-2 work over the um, to the S corp to contribute to it so that you can make that contribution. So it sounds really weird, but it's it's completely on the up and up. And I'm actually even have a case study on my website as well, so that you can look at kind of that kind of scenario and see the results from it. So yeah, I hope that helps. And if you guys have any other questions, feel free to reach out to me. And I hope you enjoy the rest of your day. Thanks.